Hi everybody, Jared Johnson here. It's time to look at the stock markets. There's something that is historically significant happening, and I think it's important. I think it's important that we note, that we talk about this, that we make sure we understand what all of this really means. Let's dive right in. First of all, we saw that in the last few days, Powell spoke at the Jackson Hole meeting, as he tends to do every year. Powell is not a ray of sunshine. He doesn't say things that are bullish for the market too often. And he's surprised. He surprised everybody this past weekend by saying the Fed is essentially becoming a little dovish, right? They're saying rate cuts might be in order for the first time. This is a big shift for the Fed. This is a big shift for Powell. Even with recent data coming out, PPI numbers being higher. Remember, this is what the wholesale price of everything pays versus the retail price. So even though our typical inflation numbers are lower and looking better, the numbers and the prices that these wholesalers are paying are still high, and they're even increasing. And so that didn't help the Fed become more dovish. But then Powell shows up at Jackson Hole and he basically says the labor market's concerning. We're going to start cutting rates. Now, why is that historically significant? Not that big of a deal, right? The Fed, they cut rates, they hike rates, they do all kinds of stuff. But here's one thing that they don't do very often. And let's look at the chart. Typically, the Fed does not cut rates when markets are at all-time highs. That's a little uncommon, right? Typically, rate cuts happen as markets are dipping. It's oftentimes looked at as a source to stimulate economies, right? Not to do anything else. So here we are at all-time highs on the S&P. This is it. This is as high as it's gone. You know, we have a few little higher points right here. We're 0.5% below all-time highs, but basically we're at all-time highs on the S&P. Pretty wild stuff. So why is the Fed cutting rates? And do we think that this is bullish or bearish for the market? Well, all we've been hearing lately is that this is incredibly bullish. I don't know if I'm buying that, because again, the Fed typically cuts interest rates as a measure to stimulate the economy. Hey, things are slow, things are sluggish. Let's cut rates and let's see if we can stimulate the economy a little bit. Well, everything's at all-time highs. So many stocks are at all-time highs. The S&P is at all-time highs. Housing prices are basically at all-time highs. So we're going to cut rates. This makes me lean to the bearish side, right? Because why is the Fed cutting rates? Because they're worried about the labor market. So if the labor market really is a concern, then is cutting rates really a bullish measure? That's something that I think we all need to think about and determine if coming out of summer is going to be a big bullish move for the stock market. Very well could be. Doesn't instill a lot of confidence to me. In fact, I'm becoming more and more concerned about the narrative that's going on here than I ever have been. And when rates get cut, housing prices will go up higher and the stock market will go up higher and everything will be fine. But what if rates are getting cut because the Fed is ahead of the curve on something that could be happening that's worse, like the labor market deteriorating and people running out of money? I don't know. It's something to think about. I'm a little concerned about this rate cut news and being a bullish signal, right? One thing that we want to look at is what could be some catalysts for some stock market corrections. And remember, it's as hard to call the top of a stock market as it is to call the bottom. Nobody's ever right on the bottom and nobody's ever right on the top. The market could go up for another 6 months, another year, but I'm becoming more cautious and more cautious as we go. Let me tell you why. There are a couple of catalysts that I think need to be paid heavily close attention to. Number one, Japan's bond market. We see Japan's bond yields are at record highs. They're back to 2000 levels. Remember, 2000.com, pain, agony, not good. And number two, this is a huge one, and I think it's got some juice left in it, but it's a big bubble, and we have AI bubble, right? These two things are concerning to me, and I think these are two great catalysts. Now, when we think about an AI bubble, and when we think about all these stocks and all these things that have benefited heavily from the AI boom, heavy hype worked out in the past, let's look at a couple of examples. I'm going to look over here at my good buddy. Microsoft is an interesting stock, And if we go back and we look at affectionately referred to as the dot-com boom, right? So I mean, talk about bubbles, right? Here is 2000 highs. Microsoft was the most valuable company in the year 2000. So here we go. This is January of 2000, right on the money. We obviously see a big sell-off. This is our big dot-com sell-off, right? This is the top of the bubble, dot-com. That's the top of the bubble right there. So what happens to Microsoft? Let's say the 5 years leading up to that, right? A lot of kind of just bumping around, moving around. But if we just say the 5 years, let's look at January 1995 to January 1999, or sorry, January 2000. Microsoft went up about 1,500%. Okay, it's a great move, 1,500%. So then, what happens to Microsoft as the most valuable company as the bubble of the dot-com craze bursts and it just explodes, right? Microsoft goes from a high to a low. We'll call this low right here, 66%. Of course, we have, you know, the great financial crisis over here, which didn't do anybody any favors. But we get this big 66% drop in Microsoft. Okay, no problem. It was hyped up. It went up 1,500%. You know, loses more than half of that value over a fairly short amount of time. Everything's fine. We're great. Well, what happens when hype meets reality, right? And this is exactly what happened. Everyone said, hold on a second. Is all of this worth what we're paying for it? Is everybody that is putting .com or internet related names in their company name and trying to make it more valuable helpful? Well, let's see what happens. Microsoft hits its high January 2000 on the money. It hits a pretty significant low in just the end of 2000. So for a straight year, Microsoft goes straight down. And then it recovers a little bit. Of course, we have 2008. But the moral of the story is Microsoft stays in a pretty shallow kind of channel here. Of course, we have some 2008, which messes everything up. But we were several years into Microsoft doing nothing, kind of staying, you know, it hits its high about $60. It stays below, for the most part, below the mid to low 30s for quite a long time, right? It loses 50% of its value and does nothing for, well, essentially 13 years. Microsoft doesn't break out of this channel for another 13 years. That's a huge consolidation. Big run up, big pullback, 13 years to do anything. So then, how long does it take Microsoft to break out of the .com high over here? Any thoughts, anybody? Let's have a little peek. Microsoft's high from the .com bubble does not break out or higher until 16 entire years later, almost 17 years later, end of 2016, Microsoft breaks the high of its .com move. So if you bought anywhere back here, you had dead money for 16 years in Microsoft. 16 years. That's not great. So that's a big consolidation. Now, of course, Microsoft has taken off and made everybody whole times a million, right? Huge run. This is a big, long consolidation. 13 years to get out of a pretty tight channel, 16 years to break that high. Does anything else sound familiar in that space? Anybody? Let's keep jogging our memories here. Let's talk Bitcoin. What does Bitcoin do in this whole process? Bitcoin has its hype moment. There's no price too high to pay for Bitcoin. So what does Bitcoin do? Well, nobody really knows what it is. People didn't care that much about Microsoft pre-2000. They said, it works on my computer. We're not really using computers for that much anyways. Oh, hey, let's go into this big tech hype, and it runs up. So what does Bitcoin do? Let's just look at kind of, as Bitcoin starts to run here. December, we'll call this December 2016, January 2017, kind of in that space. Hold on, I lost my cursor. So Bitcoin then, sorry guys, I'm having a little bit of an issue here. Bitcoin runs up about 2,500%. So a little bit more than Microsoft. Microsoft went, 1,500%, give or take. Bitcoin runs about 2,500% from around 2017 to the high of end of 2016, high of 2017. So for a good year or so, Bitcoin just goes straight up, right? This is hype. This is crazy. This is all painful and wild, right? Well, what happens to Bitcoin? It hits its high. We all know this and remember this. End of 2017. Markets love to top out in Januaries. Just keep that in mind. We have a January coming up, so let's just keep that in mind. Bitcoin tops out and it bottoms out here. Tops out in about, we'll just call that January 2018. Bottoms out in December 2018, starts to go up again January 2019. So for a year, it runs up over 2,000%. And for the next year, it runs down 85%. It loses basically all of those gains and makes a heck of a run back down. Now, this looks great right here. We see Bitcoin makes a nice little run up, but if we zoom this out a little bit, Bitcoin got stuck as well. Right? Bitcoin stayed in a channel for quite a bit of time. This is a high. We'll call that again January 2018, December 2017, right in that general area. So how long does it take Bitcoin before it takes out its high, right? Bitcoin doesn't take out that high until all these things are happening in December. This is a high December 2017. Takes out its high December 2020. 3 years later. So again, pretty much if you bought anywhere in here, you have dead money for 3 years. 3 years. A lot better than Microsoft. Microsoft was dead money for 13, maybe 16 years, depending on how we look at it. Bitcoin was 3 years dead money. Makes its way back up, huge runs. But again, tons of volatility. Tons of volatility. We see these big spikes where Bitcoin will run, if we just look at a low to high here, 1,500%. If we look at a low to high here, even more. But what do these sell-offs look like? That's what I'm a little more interested in, because as investors, we need to look at what the downside potential is here, right? Bitcoin had these sell-off points, 55%. Over here, we have a sell-off, high to low, 77%. It took a little bit of time to get some good momentum going here. What else do we have? Cannabis was a big hype. Everybody thought cannabis was going to be this great thing, right? Every beer company was going to now have cannabis-infused beer and so on, because alcohol is on a decline. And so if we look at MSOS, right? This is kind of the cannabis ETF. Well, same kind of thing, right? Now, this is just a comparison to just remind us, big run up, a lot less, 175%, sells off, loses everything and then some. And when are these guys going to make their way back? Maybe they are now, maybe they've got a little bit more to go. But this is a very typical cycle that we see, which is hype, 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 sell off, consolidation of the industry, and then we take off and run and we start to break out of channels and we start to break highs, right? Unless an industry goes bankrupt and ceases to exist, this is how these cycles work. And we've seen it in tech, we've seen it in shale, we've seen it in 5G. Do you guys remember 5G? Everybody was supposed to be able to interact with all their devices at home and all these things, which, yeah, we can do now. I can close my garage door, I can lock my house from my cell phone. Great, that's super cool. But 5G was this huge hype. Everyone was super excited about buy Nokia, buy Siemens, buy all these people making 5G related products. Adios. Tech is huge. AI is huge, right? Tech is the wave of the future. AI is the bigger wave of the future that we need to all be riding. But when does hype meet reality? When do these bubbles get exhausted? And this is what we're trying to illustrate, is that at some point the hype pulls back, the markets reach reality, all of these things that are unprofitable. Everybody remembers that Mark Cuban made like $5 billion or something selling his broadcast.com to Yahoo, which was nothing more than really a website. It was really just a website. And everybody was super excited about that, and he became a billionaire from that. How many times do we have to watch industries spend tens of billions, hundreds of billions of dollars, watch the markets go straight up just for investors to eventually find out that these aren't profitable yet, that there's huge potentials there, but they're not profitable yet, and that there is profitability that needs to happen. And everybody pulls out and lets things consolidate and decides how and where they want to play this. AI is absolutely no exception to this rule. And how do we play AI? How do we move this needle and stay on top of things? I mean, if we just look at something as simple as NVIDIA. NVIDIA is crypto, NVIDIA is AI, NVIDIA is everything. But what have we seen NVIDIA do? Nothing, nothing, nothing. Huge run up, right? Huge run up. If we look at our bottom of the market, October lows till now, I mean, NVIDIA's up 1,500%. How many times have we seen this 1,500, 2,000% run? And then things start to get unglued, right? And we start to see that these kinds of things begin to happen. And we could say, well, it's already happened in NVIDIA. Okay, maybe. And maybe NVIDIA is not the play to be had, but how often do we see this happen? And then a lot of consolidation while industries decide who the most important players are, and then highs get taken out. And that high needs to be taken out, and channel highs need to be taken out. So as I look at all of this, I just think to myself, I think it's safe to say a couple of things. Number one, we have Fed cutting rates at all-time highs. That's pretty important. That's not a common thing to have happen. Feds cut rates at lows, not at highs. So that's concerning. We have AI bubble. That's a big question mark. I mean, it's a bubble, but when do bubbles bust? That's a tough thing. It could be weeks, it could be months, it could be a year. I don't know, but AI bubble is concerning. We have Japan's bond market. And remember, if Japan starts selling and the bond market becomes unstable, what is going to be the first position to go? I could really see Japan's bond market being the catalyst for the AI bubble. And if that happens, that's where things get painful. So as we come out of summer, I just want everybody to think about this, have this in mind, make sure that you remember this is not the first time this has happened, and this is not the last time this will happen. So we have plenty of catalysts for markets at all-time highs and Feds cutting at all-time highs, and we need to watch out and be prepared and be defensive. And it's hard to say this as markets are heading higher, but this is a big concern and this is a big reality. So I hope this is helpful. I hope this raises some awareness for everybody. Good luck. Happy trading. Stay on the right side of these moves to the best of your ability. If this video is helpful, like and subscribe and comment down below with your thoughts. Let me know what you guys think. Thanks so much, everybody. Good luck. Happy trading.